This is Nightly Business Report with Tyler Matheson and Susie Guerin.
Jobs downer. The economy adds jobs in August, but nearly 100,000 fewer than forecast. What the numbers mean for the economy, the Fed, and investors like you.
Treasure trove? Alibaba sets the price range for its initial public offering, opening the door for what could be the biggest IPO in U.S. history.
And top picks, stocks that pay you to own them. 3 blue chip names to buy now. All that and more tonight on Nightly Business Report for Friday, September 5th.
Good evening, everyone. Disappointing news about the job market today, but investors on Wall Street shrugged it off, and stocks ended higher with the S&P index closing at a new record. American businesses added only 142,000 jobs in August. Now, that's not a bad number, but it's much lower than expected, and July's numbers were revised lower by 30,000. Despite that, the nation's unemployment rate ticked a notch lower to 6.1% because so many Americans gave up even looking for a job. So what happened? Where did the jobs go? And after 6 months of strong gains and a string of encouraging data about the economy, do these numbers even make sense? Hampton Pearson has more.
The retail sector, with a net loss of 8,000 jobs, led the way in the unexpected August slowdown in hiring. The sector's weakness was largely caused by 17,000 workers temporarily out of work due to the strike at the New England grocery store chain Market Basket. The overall weak number broke a 6-month streak of employers adding more than 200,000 jobs to the economy. Leading economists and government officials say the numbers don't make sense when compared with recent trends like strong auto sales boosting GDP growth and consumer confidence, and jobless claims falling.
I don't believe it. I don't believe this data. It's not consistent with anything. It's not consistent with ISM. It's not consistent with ADP. It's not consistent with unemployment insurance claims.
You never look at 1 month, and when you look at the trend data, the last 3 months is over 200,000. The last year, we're averaging very solid gains.
The unemployment rate fell to 6.1%, but that's because some 2 million people stopped looking for work last month and were not counted as unemployed. However, at 4.7 million, job openings are at a 13-year high. Another reason leading economists are skeptical about the latest government data.
Job openings have increased very dramatically, and now the number of open positions are back to where they were pre-recession.
August job growth leaders include professional and business services, adding another 47,000 jobs last month and a total of 639,000 new workers in the last year. And the strong summer rebound in vacation travel continues to boost new jobs in the hospitality sector. Hotels and restaurants hired another 22,000 workers in August, nearly 290,000 in the last year.
We are now coming off of 52 straight months of job growth. This past month showed 22,000 new jobs created. And really that's driven because of greater leisure travel, both domestically and internationally here to the U.S.
Today's slowdown in job growth may temporarily stall the debate over wage growth and the timing of the Fed's next move on interest rates. For Nightly Business Report, I'm Hampton Pearson in Washington.
33 and counting. That is the number of times the S&P 500 had closed at a record high this year. And today, despite that soggy jobs news, was another of those days. Stocks rebounded from early losses, finished at session highs, and this marks the 5th consecutive week of gains for the major market barometers we follow here for you. Now, at the close, the Dow was up 67, the Nasdaq ahead by 20, and the S&P added 10 to reach that all-time closing high of 2007. For the week, all 3 of those indexes had marginal gains.
Joining us now to talk more about today's jobs report and what it says about the health of the U.S. economy, Stephen Whiting. He's Global Chief Strategist with Citi Private Bank, and Kevin Cummins, Senior Economist at UBS. And Stephen and Kevin, thank you so much for joining us. Stephen, let me begin with you. You heard our report. What is the message of this employment news today? Is it a fluke? Is the number a fluke, or something more serious going on? What do you think?
Well, I mean, the sad truth is the U.S. or most large economies can't measure what employment will do on a month-to-month basis. These are statistical samples that are extrapolated, and then you heavily manipulate them with seasonal adjustment. What I think is meaningful from this report is that, you know, back in 2008, we had 155 million people available to look for work or working. Today, we have 156 million. The unemployment rate has fallen from 10 to 6%. As you heard earlier in the program, unfilled job openings are now the highest level since 2001, yet the U.S. labor force really hasn't budged. We have been tightening labor markets at rather moderate or slow GDP growth rates, and that's suggesting some future limits. We should not be expecting a big acceleration in employment growth for what has been strong now going on a fourth year.
So, Kevin, let me pick up on something Stephen just mentioned, and that is unfilled job openings at a high level. Is it because we just don't have enough skilled workers to fill those jobs? What gives here?
Yeah, well, the labor market, I'd take a little bit more of an optimistic outlook for the U.S. economy in that we're creating over 200,000 jobs a month. So far this year, you've averaged 215,000 jobs. That's going to continue to push the unemployment rate lower. Admittedly, some of the drop in the unemployment rate reflects those dropping out of the labor force. But as the labor market has picked up some momentum this year, you're likely to see a little bit of a pickup in the number of people coming back into the labor force, so that you're really probably going to stabilize going forward from your labor force participation rate. The sort of job growth that we're getting is going to put more than enough downward pressure on the unemployment rate where you start to see a pickup in wages. And that's one of the missing ingredients here that you touched on in your earlier spot. And I think that's going to likely help the consumer and get GDP growth going more towards 3% going forward and back away from the 2% that we've had so far in the recovery.
Well, I'd like to pick up on that 3% GDP growth. Stephen, let me ask you this. I mean, a lot of people are thinking that it's 3% now, maybe it'll go higher. There's going to be a real pickup. The economy is just going to take off, and with it, the stock market.
Right.
Is that how you see it? Is this kind of the new speed limit for the economy?
Well, I think we can have 3% GDP growth in the coming year. We can certainly do a lot better than this first half average with the negative first quarter and 1%. But the idea that there is a recovery that's still ahead of us that we haven't already been quite deep into, I think is a mistake. I think if you look at labor markets, the pace of declines, the trajectory of declines in the unemployment rate has been suggesting that the economy has already been growing above trend for some time. So you don't, for example, shouldn't expect employment to go from a 200,000 monthly pace or a little bit above that, as we've seen over the past 12 months, to a 300,000 number or some tremendous gain from here. We are already there, and this is what a recovery looks like.
So, Kevin, what do you think the normal rate of growth for the U.S. economy will be over the next decade or so?
Well, there's been a lot of discussion here, and it's an active debate. And there's a lot of variables that are very difficult to forecast to make that assumption about potential GDP growth. And I can sympathize with the idea that it's come down some. But I think a lot of the kind of doomsayers, I think that's a bit backward looking. If you think about it more recently, you've had a massive fiscal tightening. That's not something that's going to happen going forward.
Is it closer to 3% or closer to 2%? Kevin?
I'd argue closer to 3%, yeah.
Stephen, let me just...
And the other part was the deleveraging. The consumer has delevered, and I think we're back at a spot. If you look at, debt to income ratios are in a healthy position now. You've had a higher savings rate.
All right, I'm sorry to cut you off. I just want to get one last comment from Stephen before we wrap this up here. You kind of worry me with your outlook of what's going on. So as an investor, I'm sort of wondering, like, what do I do with my money? How do I protect myself? I mean, what are you telling your clients over at Citi?
I would be aware. Right now, I think we are well cyclically positioned. Again, there's no obstacles to growth within the coming year. We're overweight equities and moderately underweight fixed income. We're overweight credit and prefer that over the rate rate market. But I think our asset allocation, we should just not assume that this sort of thing can stay here, that 3 years from now, there may be some meaningful limits to the U.S. recovery. If you think about what has slowed the labor force, there's been nothing from the demographic side that has already effectively slowed the labor force. I've been an optimist since 2009 and waiting for a long time for that labor force recovery.
All right, it's a conversation we would love to continue. A lot to talk about on. Thank you so much, gentlemen. Stephen Whiting with Citi Private Bank and Kevin Cummins with UBS. Thanks so much. Well,
overall job growth may have slowed last month, but hiring in the maritime industry is speeding up. And there's a rush to bring in new blood into the ancient profession as it faces a potentially crippling shortage of skilled workers. Mary Thompson takes a look at where the jobs are from the port of Los Angeles and Long Beach.
Global trade is on the rise. Good news for companies like Crowley Maritime, a 122-year-old family-owned firm operating 200 vessels around the world.
Our plans are to hire between 500 and 600 maritime workers over the next 5 years.
The challenge for the company's CEO, Tom Crowley, finding those workers, especially officers. Why? Competition for their talent is global. Many officers are nearing retirement age, and new regulations mean more training and time on the water for their replacements.
Just how big is the problem? Well, a 2010 report by the International Maritime Organization forecasts the industry could be short 27,000 to 46,000 ship's officers in a few years.
To fill its billets, Crowley recruits newly minted officers from the maritime academies and works with the unions. The unions monitor retirements and make sure there are enough hands ready to work on deck.
We maintain our pool at 2 people for every job all the time. In a realistic world, what would you like to have? 2.5 people.
30-year-old Martin McDonald is in a union-run training program.
Left, right.
For 3 months, he's schooled in the basics of the maritime industry: firefighting, life-saving, and navigation. This will land him on a low rung, but one where he can start to ascend the ship's ladder.
I want to have my own ship by 50. I mean, that's my goal.
For 12 years, Steve Peckham's been a captain, leaving architectural engineering for the wide range of jobs the maritime industry offers.
There's a ton of different opportunities there. You can do construction towing, you can do ship work, you can do ship assist work, you could work on an oil rig. I mean, there's a bunch of different opportunities. So yes, you're a mariner. It's kind of like being a doctor. There's a million different kinds of doctors you could be.
And you can do those things earning a decent wage. McDonald could earn up to $40,000 his first year. A captain earns 6 figures.
I've done military, I've done retail, I've done IT, but this is my last go at it, and I think this is going to be where I'm going to fit in the most.
A career that is fit for the long haul. For Nightly Business Report, I'm Mary Thompson at the Port of Los Angeles, Long Beach.
European Union officials have agreed to a new round of sanctions against Russia. They're expected to be imposed early next week. Now, this comes just hours after world leaders wrapped up a 2-day NATO summit today, where Russia was on the docket. Hadley Gamble has more from Wales.
Just a couple of key takeaways from the close of the NATO summit here in South Wales. Alliance members coming together, finding a consensus on what to do in terms of Russian aggression. They've decided on going ahead with this rapid response force, much talked about in recent days. They're calling it a spearhead force. It has a land, air, sea component as well. It's going to be based in Poland, and it's going to reassure those Eastern European states that the NATO alliance is there for them, at least in terms of security.
Increased NATO air patrols over the Baltics will continue. Rotations of additional forces throughout Eastern Europe for training and exercises will continue. Naval patrols in the Black Sea will continue. And all 28 NATO nations agreed to contribute to all of these measures.
Now, also, they've been discussing what to do about the threat from Islamic terrorists. Islamic State, major concern for many of these European countries as well as the United States. They've formed a major coalition of the willing, essentially. They say they want to tackle the Islamic State, but we have yet to hear a clear plan or strategy in terms of how they're going to do that. And essentially, the U.S. Secretary of State has said, a red line for all of these countries is going to be putting boots on the ground. Nobody wants to do that. Also, some homework for the Europeans in terms of their defense spending. A lot of buzz around here about, are they going to pony up? Are they going to begin to fund fund their own security. So a 10-year period where the Europeans will be able to meet that 2% military spending in terms of GDP. It's a non-binding resolution, so we'll just have to wait and see if they meet that benchmark. For Nightly Business Report, I'm Hadley Gamble in Newport, Wales.
Coming up, 3 blue chip buys that pay you handsomely to hold them.
New details on what is expected to be Wall Street's biggest initial public stock offering ever. According to regulatory filings, shares of Alibaba, this is the Chinese e-commerce and social networking giant, will begin trading on the New York Stock Exchange 2 weeks from today, September 19th. 320 million shares will be made available for sale to the public, priced in a range of $60 to $66 apiece, raising more than $21 billion in that IPO. Now, that tops Visa's record $17 billion IPO back in 2008. And that could value Alibaba at a staggering $163 billion. To put that in perspective, it's way more than what the Walt Disney Company is worth. Yahoo, which owns nearly a quarter of Alibaba, could net as much as $8 billion by selling a portion of what it owns in the IPO. Yahoo shares rose 1% on today's news.
Gilead Sciences is reportedly close to making a generic version of its $84,000 drug, and that is where we begin tonight's market focus. The drug, called Sovaldi, cures about 90% of patients with hepatitis C who take it. But its high cost has stirred controversy. The company is said to be close to a licensing deal that would allow a lower-cost version of the drug to be sold in about 80 developing countries, but not here in the U.S. That sent shares down almost 1.5% to $105.36. Well, they say loose lips sink ships. Well, Tesla shares took a hit today after the company's own CEO, Elon Musk, was maybe a little too honest about his company's stock price.
I do think people sometimes get carried away with our stock, honestly. Because I think our stock price is kind of high right now, to be totally honest. Or rather, let me put it this way. If you care about the long term of Tesla, I think the stock is a good price. If you look about the short term, it's less clear.
You see the guys around him squirming there when he did that? All right, Musk made those comments after announcing Nevada as the location of the company's $5 billion battery factory, which we told you about right here last night. Those comments helped send the stock down 3% to $277.39. Shares of Dollar General off after Family Dollar rejected its sweetened $9 billion bid, citing antitrust concerns. Instead, the chain is sticking with its $8.5 billion offer to be acquired by its smaller rival, Dollar Tree. Dollar Tree was the only one of the three to end the day higher.
Michael Kors' largest shareholder is selling its entire stake in the luxury retailer, and the news pushed shares lower. 2 of the company's board members will sell their combined 5.7% stake and step down from the board. Shares were off 4.5% to $76.39. Also, a down day for another retailer, Gap. It reported a 2% drop in August sales, missing forecasts. Its Old Navy unit posted a strong increase in sales, but that didn't reassure investors. Shares fell 4% to $44.65. And Priceline declined after Evercore cut its rating on the stock. The firm downgraded the travel booking site to equal weight and cut its price target by $100 based on concerns about competition from Google. Shares fell 2% to $1,195.
Our market monitor tonight is a classic stock picker who likes companies that put shareholders first. He's Ed Perks, portfolio manager for the $97 billion Franklin Income Fund, part of Franklin Templeton, up 9.5% so far this year. Ed, welcome. Good to have you with us. You like companies that return capital to shareholders, and your first pick tonight has a 4.7% very lush dividend. It's Royal Dutch Shell. Tell me about it.
Yeah, Royal Dutch is one of our top holdings in Franklin Income Fund, and really it's about expectations that have existed for that company and management turnover. There's a new CEO at Royal Dutch Shell, Ben van Beurden, been on the job about 6 months and actually has made some nice progress already, really focusing on capital allocation and improving free cash flow. Importantly, we think a lot of that will benefit shareholders in the form of dividends going forward.
You also like, Ed, Intel, which has a big dividend. Tell us more about why investors should pay $35 a share for Intel.
Yeah, you know, Intel's a really interesting example. It's a company that's already been revalued, re-rated by the market. It started out this year really out of favor. I think people were really concerned about the overall outlook for the PC market. And the company's really delivered, shown better performance in their core businesses, PCs and data centers. Over 80% of revenues at Intel, that's been working. And importantly, we've seen some signs that some important growth markets like mobile and tablets, the company's starting to perform a bit better there as well. Incredibly strong balance sheet, and another example of a company that is very committed and focused on delivering that to shareholders. So even though we've seen nice performance from Intel, we think it can continue to perform well, trades at a discount to the overall market, and really has that nice profile.
And your final pick pays you 4.5% just to own it. It's Verizon.
Yeah, you know, this is on the other end of the spectrum, a stock that's actually underperformed the broader market. But when we look at Verizon, you know, we really see not just that attractive dividend yield, but a company that just this week also increased its dividend for shareholders. I think of the 8th consecutive year where they've increased the annual dividend, and a company that we think is really in a tremendous position in the wireless business in the U.S. They've shown continued strength there, not just in revenue growth, but also maintaining a very high margin, and that's really driving profitability. And that's going to continue to benefit Verizon.
All right, Ed, thank you very much for being with us tonight. Have a great weekend. We appreciate your perspectives.
It's good to be with you.
All right, Ed Perks is a portfolio manager for the Franklin Income Fund.
And coming up next, you've heard all about them and probably seen them buzzing overhead. Drones. We'll introduce you to one guy who's flying high and making money from them. That's next.
On this Jobs Friday, a story about a former Marine in Southern California who's making and selling drones for a living. An FAA ban put commercial drone use in a murky gray area, requiring special permission until rules are formalized, which might not happen until well into next year. But making and selling them, well, that's another story, and it is our latest bright idea.
It sounds like a swarm of bees or your neighbor's leaf blower, but it's not. It's a drone, and the noise it makes is music to Patrick Smith's ears. Smith liked to fly radio-controlled planes when he was a kid. After a stint in the Marine Corps, he tried selling vacuums, among other things. On a whim, he mixed photography with his passion for flying machines back in 2007.
One day I took a little GoPro and put it on a styrofoam airplane. When I landed and I actually reviewed the footage, that's when I was blown away, and I was like, this is aerial photography without having to hire or pay for a real airplane.
The military's been using unmanned aircraft or drones for years, and you've heard about the big guns, Google and Amazon, looking to use them for same-day deliveries. But Smith has been building and selling unmanned copters, as he calls them, since 2009. Providing bird's-eye views of surfers, glaciers, street scenes, cityscapes, motocross, and he's even shot music videos. To say Smith's business, Aerial Media Pros, has taken off, well, it isn't just a cliche, it's an understatement.
We're projecting in 2017 to break 100 million in sales, and there's absolutely no reason why this couldn't be a billion-dollar company.
But Smith's video was anything but perfect in the beginning.
It was always shaky and you were getting vibrations, and that was a constant plague. Your tilt and your roll.
To get past the turbulence, Smith developed a stabilization system. Now he can peek above the treetops and turn on an approach to get in close. Smith's high-end copters can cost $20,000 to $30,000 apiece, a pittance for Hollywood producers used to paying $5,000 to $10,000 an hour to rent choppers and airplanes.
Now it's able to just adjust and keep the camera at the right horizon.
Tanasi Tran is a professional photographer who trusts Smith's higher-end equipment to carry his gear.
We have literally about $60,000 or $70,000 floating in the air. This is a allowed us to provide services that normally would require a big helicopter.
Smith's lower-end copters, which can be had for as little as $700, are attracting an even wider range of commercial customers.
Some people use them to check their duck blinds out in Texas. Agriculture is a good use, search and rescue. People are doing like lots of real estate.
The company's growth has Smith hiring other military vets, like Brandon Wallachek. In less than 6 months, he's gone from technician to sales manager.
In the military, you have all sorts of different people coming from all backgrounds. You learn how to deal with people really well. Not only do you get really good work ethic, you also get, the aspect of having a really versatile person for the workforce.
And while Google, Amazon, and others wait for the government to regulate unmanned commercial flights, Smith is actually looking forward to it.
We don't want to just have, 20,000 of these things up in the air. So I think the guidelines that are going to be coming down are going to be very helpful.
Plenty of potential investors have reached out to Smith, but he's not looking for financial help right now because he sees nothing but opportunity on the horizon.
If we can branch out into the government sector and start supplying the copters to them, I think that's going to propel us even further and faster, but it's also going to give us an edge on helping serve the community.
Smith says he's bringing in more than $700,000 a month right now. His client list includes NASA, Google, which is updating its maps, and even Elon Musk's SpaceX. Studios are still shooting features too, and several films Smith worked on are due out over the next few months. It was very interesting at how much cheaper the use of the drones is than for a Hollywood filmmaker to use a helicopter. And I remember seeing some of the videos of the Napa earthquake a few weeks ago, shot of the damage, that is, shot by drones. It was the best view you could possibly see.
They're the coolest things. I haven't seen them, but I think we'll be seeing more of them.
All right, that'll do it for Nightly Business Report for tonight and for this week. Thanks for watching, everybody. I'm Tyler Matheson.
And I'm Susie Garib. Have a great weekend, everyone. Tyler and I will see you right back here on Monday night. I'm Susie Garib with a Nightly Business Report news brief. American businesses added 142,000 jobs in August. Not bad, but far short of expectations. And the nation's jobless rate fell to 6.1% because so many people simply stopped looking for a job. That lifted hopes on Wall Street that the Federal Reserve will delay raising interest rates. Stocks reversed early losses and closed at the highs of the session, up for the 5th week in a row. The Dow rose 67 points, the Nasdaq up 20, the S&P added 10 points, closing at a new record. And the upcoming New York Stock Exchange IPO for Chinese e-commerce giant Alibaba is expected to be the biggest ever, raising more than $21 billion and valuing the company at $163 billion, way more than Disney. Be sure to tune into Nightly Business Report right here on your public television station.